Guys, how we doing? I'm Ryan Mack. Welcome back to Trading, guys. I'm just going to fly on through this today. I'm not going to waffle, first of all, so let's get cracking. As always, get your notebook out. You're going to write currency strengths. If you want to write the date beside it, so you know like each week which one's which, and you keep in line with it, that's fine. Because if you're like me, sometimes I write notes here on a blank page, and then I'll write notes here on a blank page, and sometimes you're like, fuck, what date is that? You know, so if you're like me, you can put the date beside it as well. All right, but like when it's like this, it's unnecessary. Anyway, the title is currency strengths, or you can write economic strength, whatever. I always write just currency strengths. Then here you're going to write strong, weak, and neutral. I know I repeat myself if you watch my channel all the time, but if you're someone who's watching this for the first time, that doesn't seem logical. Strong, weak, and neutral. You would think it's strong, neutral, and weak. The reason why we do this is that you mark down all the currencies / economies which are strong, the ones which are weak, and the ones which are neutral. At the end of it, you then cross out the ones that are neutral. You will then trade a strong economy against a weak economy. Now that will either be buys or sells depending on which one is the primary currency or the secondary currency, okay? But that's how you choose what you're going to buy based on rock solid data and fundamentals. It's not just about drawing a fucking line on your page when a candle breaks and saying, oh, that's gonna fucking melt now, and then the next candle it starts fucking flying and you're like, how did that happen? Well, it happened because of fucking fundamentals. Money flows and all sorts, right? Risk on sentiment, risk off sentiment. There's so many different variables, sorry, not variations, variables. So let's have a swatch. What I do is, moving on, when I go through the currencies, I go through all of them one by one, apart from Aussie, New Zealand, and China, okay? CHF, I don't even bother looking at anymore. It's just fucking pointless. It never changes. I only trade CHF, Swiss franc, based on market sentiment, not based on data. So if it's risk off, I'll be doing buys in CHF. If it's risk on, I'll be looking for sells on CHF pairs, okay? Here we go, apply. What date are we on now? Okay, so that's for last week, that's fine. Let's have a look at the numbers that we got last week. So the reason why we do China, Aussie, and New Zealand all together is because they're very closely correlated, and it's called positive correlation. So if China's doing well, Aussie and New Zealand will potentially be doing well. Well, especially Aussie. New Zealand a little bit, but especially Aussie, okay? If China is not doing well, Aussie will not do well, okay? And Aussie and USD are usually what we call negative correlation. So if USD is going up, AUD is usually coming down. If USD is coming down, AUD is usually going up. So they move in opposites, right? That's called negative correlation. Positive correlation is when they ride together. So China going up, Aussie goes up. China goes down, Aussie goes down, right? It's positive correlation, okay? And like, for example, in cryptocurrencies, Bitcoin and Ethereum are the same, okay? They're both positive correlation, all right? So when it comes to manufacturing PMI, when it comes to services PMI, blah, 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 and you see the numbers here, the very easy way to remember it is anything below 50 is bearish. Anything from 50 upwards is bullish. That's it. If here it's 14, let's say that was 47.2, right? And then here it's 49.4, that's still bearish. It's shown positive growth, yes, but until it breaks beyond 50, it's classed as bearish, okay? So that's another point to note. Don't just think because, you know, it's went from 47 to 49, oh, that must be bullish. It's not bullish until it breaks past 50, all right? So we've got PMI manufacturing, 49 bearish. This one is bullish. Bullish. Building approvals, that's very bullish. Sorry, very bearish, sorry. So when you look at building approvals, right, you'd be like, well, what the hell does buildings being approved? You know, so let's say you've got a property developer, right, that wants to build a block of homes. Well, that's the approval. That's building approvals and stuff, right? So why does that affect the markets? Why is it like, oh, that's bearish or bullish? Well, it's not just that one thing, it's everything else that comes with it. So let's say building approvals is the top of this umbrella here, right? You've got an umbrella and you've got little strings coming down from each bit. A bit like one of the Australian hats, you know, one of those fucking stupid cork hats that they have for flies. and you've got the hat, and then you've got the corks and all that hanging down, right? So let's just say in this example we're using an umbrella, and that umbrella is building approvals as the top, okay? And then you've got all these little fucking cork strings coming down, and that's what makes building approvals important. So from building approvals, it means stuff like, if building approvals is down, it means banks are not they're not funding building companies to build these properties, right? So they're not lending out money. It means that if there's no building approvals going up, it means that less people are then applying for mortgages to buy the fucking buildings which are about to go up. You know what I mean? And there's this whole knock-on chain effect, and that's why if building approvals are up, it means the banks are giving more money. When they're giving more money and people are building more properties, and then people are then borrowing money, i.e. mortgages, to then buy those buildings which have just been approved, it then stimulates the economy. Okay, that's what keeps the wheels greased. Okay, so that's why it either has a positive effect or a negative effect. All right. I'm sure my mate Dan could explain that far more in depth and better, but at least I like to explain my stuff like layman's terms, so like everybody can get it. Company operating profits, rating dog manufacturing PMI, bullish. Overseas trade, bullish. Current account, bearish. Bearish. Bullish. 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 Good trades balance, bullish. So when it comes to trades balance, right, you either get a deficit or a surplus, right? If it's above, if it doesn't have a minus sign here, that means it's a surplus, right? So basically all that means is a company is there. Sorry, a company. I'm talking shit. I get put off by that message. It means a country is exporting more than it's importing, i.e., it's selling more than it's buying, which means it's making more money than it's spending, right? And so that's exactly it. It's as simple as that. That's what the trades balance is for. If you looked on here and it said minus 7 billion, that then means that the country is importing more than they are exporting, which means they are spending more than they are making, i.e. they are losing money, okay? And that's why it would then be seen as a negative for the economy, all right? Anyway, moving on. Let's see what we've got next week. West Bank sentiment, CPI, China next week, new loans. We like to see new loans. So why we like to see new loans is because if banks are giving out more loans, if they're giving out more money, it means people are going to be spending more money, and it's going to stimulate that economy, right? That's it. That's a very layman's terms way, and that's all you really need to know without confusing yourself. CPI year on year, we want to see that. PPI year on year, we want to see that. It's all mainly for China. So I'm going to keep NZD at neutral. Obviously, we don't trade China, the Chinese currency, so we don't need to put that in. And AUD, I'm going to keep it at strong for now. Now, like, you really need context when it comes to trading. The AUD economy as a whole is pretty fucked, right? However, at the moment, there are strengths. So let me just explain this again. Let me just pull this down. So what you'll get is you get market cycles, right? When it goes like this, right? And then it comes down as well. So the Aussie economy right now is pretty fucked. You'd be looking at it being about here because it's quite high and on its way down, right? But as it's on its way down, you also have this part here where it's coming back up. So it's showing strength, even although the greater, the larger picture of the economy is pretty fucked, right? I.e. coming down. But if you look now, it's showing this strength, right? Well, it's just because we're at this part of the cycle. Overall, it will be coming down, but we're just simply at this part of the cycle. Okay, so this is where like trading gets a little bit tricky because people be like, well, the economy's fucked. Why is everything going so well? It's just in part of the cycle. You see what I'm saying? And you can trade that. It's absolutely fine. But that's the reason why. Okay, market cycles. I hope that helped explain it. So look, it's doing well here, but it's still, look, what's this one? AUD CAD. I mean, both are pretty shit. This could potentially reject here. This is bang on my area, so I've only done obviously the thingy, but it could as well do that. All right. There we go. It could very well reject here, boom, and then start to melt. And I will look to trade it. So where I look to trade, you can have two entries on this, right? For example, here, you can enter this, pardon me, and you could put your stop loss above here, right? Pardon me again. You could enter that there, and it's the higher risk trade. Why is it higher risk? Because you don't have any confirmation that it's about to turn. You could enter that here, and it just keeps fucking flying all the way up, right? That's why it's a higher risk trade. A trade with less risk is simply one that's showing you confirmation that, it is now going back in your way. So what's the confirmation? Confirmation is this: boom, 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 bang, bang, enter here, and away you go, right? This would be a safer trade because it's then giving you lower lows and lower highs, okay? So that would be a safer trade, entering around here after it's rejected, came down, retested, bang. I mean, you could enter there, this retest if you wanted, but, you get the idea. That would be the safer trade. This would be the riskier trade. It's up to you which type of trader you are, okay? It's not for me to say if you shouldn't take this or you shouldn't take that. That's for you to decide. What we're on now, let's move on, guys. CAD. Let's have a look. Yeah, Canada's pretty fucked. Let's go back. See last week's news. Manufacturing PMI 48.3, bearish. Bearish. Still classed as bullish, but look, it's taken a massive fucking drop. So what happens here, you can predict that it's probably going to fucking continue to melt when the next numbers come in. It's probably going to be less again, right? So you get that overall big picture. You're not trying to predict the future, if you like. You're just trying to see what the potential is for the future, all right, and where it's potentially going to go. Obviously, note that could, something could happen that could fly. Oil prices might start flying, which would then bring all this back up, blah, blah, blah. Anything can happen in the markets. But you're just trying to give yourself a picture of what it's looking like. All right, and for me, CAD is fucked. It's still weak, and I'm going to keep it at weak. With the Canadian dollar, the main strength of Canadian dollar is oil, and oil prices are really low just now, okay? Next week's news, there's no real news. There's an OPEC meeting, so that's today, actually. CHF, I don't even bother looking at that anymore, right? It's just pointless. It's never get any cold hard data. It's just the same three fucking things, every other time. But when you're trading CHF, you base it on risk off sentiment. So markets are 9 to 8% of the time risk on, okay? And if something happens like Russia fights Ukraine, like when it just started, markets will quickly switch to risk off, and they're like, oh fuck, that just means they're not willing to take risk, and they want to move their money into risk off assets and currencies. So a risk off asset is gold. That's why when a war kicks off, you see gold fucking flying, because people are lumping the money into safe assets. That's all it is. It's not that they're just like, oh, gold is one to go to for war. It's because it's a safe asset, okay? And other safe currencies are Japanese yen, Swiss franc, New Zealand, and also the USD. The USD is actually both a risk on and a risk off currency. However, if whatever is happening which is risky or war or something around the world, if that's going to potentially involve the United States, like they're going to fucking jump in and start gobbing off and make a war with someone, then of course that won't become a risk-off asset at that point. For example, when Russia and Ukraine kicked off, what was everyone's initial thought? It was, oh fuck, what's America going to do now? Even though it had absolutely fuck all to do with Americans, everybody just knows what the Yanks are like, for loving a bit of fucking war action, and everybody's first thought was, what the fuck is America going to do now? So then people are afraid to keep their money in USD in case they stick their nose in and go to war. So at that point, they would not use the USD as a risk-off currency, okay? They would use a safer one, i.e. gold, Swiss franc, NZD, Japanese yen, okay? Right, we're on Euro now. When it comes to Euro, we do look at everything like Spanish, Italian, blah, 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 but the ones that we really care about is actually just French and German. Okay, and it's because they have the largest economies which actually sway the Eurozone, all right? But like in terms of this, we would take into consideration the Spanish and Italian and so on. So look at this: bullish, 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 and it's all broke through that barrier. See, still bearish, bullish. Oh, that's bullish because it's dropped. Unemployment has dropped, so that's bullish. Unemployment rate, bullish, bearish. Unemployment rate, that's bearish. Bullish. It's still the same as before, but it hasn't dropped. They've managed to keep it up high, so that's bullish, bullish, bullish. Now, don't be fooled that that's red. Okay, like I say, I say the same stuff in my videos. It's because I never know who's watching my video for the first time. And the thing is, even if you weren't watching my video for the first time, all this stuff it's the same fucking shit week after week after week. You're just interpreting it, having a look at the numbers and data and be like, okay, what is this? What is the story this is trying to tell me in terms of the economy? Are things going up? Are things just being level? Or are things starting to come down? That's it. It's either going to tell you one of those three stories, you know? And it's not just this one week. You're building it up with all the other weeks that you've been doing consistently along. All right? Spanish. So, yeah, as I was saying, don't be fooled that this is red thinking... And look, if you look here, it's 55.1, okay? It's 53.2, which means it's dropped, and it's red. Now, many people that don't understand how to read this correctly, they would look at that and they would be like, oh, fuck, that must be bearish. That's not good. That's bad news. No, it's not. If it's above 50, it's bullish. But why is it red? Because it was anticipated to come in at 54.4 and it came in less than forecast. Okay, it came in less than they expected it, so it's showing red. But as long as that's above 50, it's bullish. It just means things have slowed down since the last print. Okay, that's it. And things can very easily pick up again in the next print. All right. Like I said, the market cycle, you know, up, down, up, down. Is it in general, is it going up or is it coming down Euro overall, the bigger picture? French Financial Services PMI, bearish, bearish, bullish, bullish. Oh, sorry, it's coming down. Actually, it's just higher than expected, so it's coming down, so it's bearish. Sorry, my bad. Bearish, 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 sticky, sticky. So from all of this, you would just say that that's mixed data. There's quite a lot of positive in there, but it's also mixed data, right? It's strong and steady. It's not strong and flying, but it's strong and steady. Okay, so I'm going to be keeping Euro in strong, because you don't just, even if this was bad numbers this week, you don't just change it because you've had one bad week, okay? You change it on the bigger picture. Okay, have I been looking at this for the last 3 weeks and it's been coming down, 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 down? Okay, now I can move it from weak to strong to neutral, neutral to weak, and so on. All right. Let's have a look at what we've got. Next week we have 10-year bond auction, main refinancing rate, monetary policy statement. The 19th of September, things are going to get fucking spicy, lads. It's when interest rates and I think it was loan terms, etc., will start to run out. So things will get spicy on that date. And when that fucking hits, there is no floor and there is no ceiling. If it starts melting, it will melt like fuck. And if it starts flying, it will fly like fuck. So please be wary and be safe on the 19th of September, alright? Don't go fucking nuts. Now that I've said that, nothing will happen. It's better to be safe than sorry, right? Let's see, what have we got? Monetary policy. We've got CPI next week, but it's month on month, okay? So when it comes to swing trading, we really care about quarter on quarter and mostly year on year, right? That's what we really want to see for swing trading. Month on month is more like, you know, it just kind of gives you that intraday, what's happening in the now picture, all right? Doesn't give you the bigger picture, but we still look at it nonetheless. So Euro, I'm going to be keeping in strong. Let's have a look at Pound. Pound is doing quite well. Nationwide. So this nationwide HPI, that's That's basically like this. The other one, building approvals. Okay, this is like a mortgage broker. They're going to approve mortgages and stuff or not. That's what this is for. So that's dropped. That's bearish, bearish, bearish. Mortgage approvals is sticky. Net lending to individuals is it's dropped, but it's higher than forecast. So that's still quite high. Net lending. Financial PMI bullish, bearish, bullish, better than anticipated. Okay, numbers come in better, so slightly bullish. So again, it's mixed data, but I would say for now the pound is still quite a strong economy. All right, but it's doing quite well. What have we got? We've got inflation at 4%, which is it's not fantastic for people who live there, but it is fantastic for the country. Canada and the Eurozone have done really, really well to get their interest rates back down to around the 2% mark. Because that's what the market cycles are all about, right? It's about getting your central bank rates up, and once they're up, then you try and get them down to 2% as quickly as possible without fucking destroying your economy. That's what it's all about. And the Eurozone have done that very well. So Canada's done it, well, I wouldn't say quite well because everyone's fucked in Canada, but... The Eurozone have done really well on that. Let's have a look. Next week we have GDP month on month, PRC retail sales year on year. Yeah, we definitely want to see that. Construction output on trades balance, manufacturing production M&M, consumer inflation expectations. Okay, so I'm just gonna keep pound and strong for now. It hasn't really given me a reason to be like, oh god, that's weak or anything. Okay, it's still pretty decent numbers. What are we looking at now? Japanese yen. We've got 2 more to go, guys. Japanese yen and USD, and that's us done. All right, and then I'll go into the charts and we'll have a look, see if there's any trades to take. Okay. Last week I done a live with the guys just to show them, look, there's fuck all for my method, you know. Now remember, if you're new, it doesn't even matter if you're new in trading. The thing is, see when you're doing my method, the long game, right? It's very easy to sit here, especially when you're in our group and you're seeing guys taking scalps every single day making money. It's very easy to sit here and go, oh fuck, should I just take scalps? This is shit. You know, everyone goes through that, even me. But I've just done it for so long now that I am very good at following my rules, and I know that my strategy works very fucking well once it finally comes into play. And it's very, very low risk, you know. So I'm happy to just leave it. However, it's always tempting, all right? It's not just you. Like, let's say you're a beginner, or you've been doing it for a year or 2 years, whatever, and you're like, man, I keep wanting to jump into scalping and then jump into this and jump into that. You're not the only one, right? Fucking everyone feels that way, but you just need the discipline to follow your rules. Japanese yen. Capital spending quarter on year is bullish, bearish, bearish, bullish, bullish, bullish. Household spending slightly bullish. It's increased slightly, but it's just showing red because it wasn't quite as high as what they thought. Leading indicators is alright. So average cash earnings, why is that bullish or bearish? Well, average cash earnings is just basically how much money are the people in Japan making in their job. If that goes up, like the percentage from 3.1% to 4.1%, that just simply means that people's salaries are getting bigger for doing the same job. That's all it is. That's like if you're working in your office and you were previously getting 22 grand a year, you're now getting 27 grand a year, or 31 grand a year or something, right? Your average earnings have increased. Now, why does that have a bullish or a bearish effect on the market? Well, if your average earnings have increased, it means that you now have more money in the bank. Now, let me ask you this. If your job started paying you more money and you suddenly went from after tax, instead of having 1,400 quid left, right, 1,400 pounds at the end of the month, you now suddenly got fucking 2,100 pounds left at the end of the month. What are you going to do with that money? Are you going to put it into an ISA, a TESA? Are you going to put it into stocks and let it grow bit by bit? Or are you going to spend it on a load of shite? You're probably going to spend it on a lot of shite. And that is why it has a positive effect, because if people are earning more money, they buy a lot more shit. When they buy a lot more shit, they stimulate the economy, which boosts the economy. Okay, that's why it's positive. If And not just only about buying stuff. It's like when people have more money, what else are you going to do? You're probably going to upgrade your car, right? So if you've got a Ford Focus, you're probably going to upgrade it, and get yourself a fucking Mercedes A1 or what the fuck they're called. You're then, instead of taking your missus to a restaurant for a meal once a month, you might do it twice a month. You might even do it every Friday night if you're feeling even more flush, So you're constantly stimulating the economy in multiple areas, okay? However, if the opposite of that happens and people are earning, if that went from 3.1 to 2.1, it means people are earning far less money. What happens when you're fucking skint? Well, we're just going to stay at home this weekend, kids. No more takeaways, no more Indians, no more Chinese. No more this. We're just going to sit and watch Netflix tonight with fucking homemade popcorn. You know what I mean? That's the type of thing that happens, and that's what. So then you're not out spending money and buying a load of shit, and then you're not stimulating the economy, and then the economy starts to drop, and that's why it's not a good thing for the economy. Okay, and the currency. Where are we? So look, just to explain as well, even though these are quite decent numbers, you have to remember the Japanese economy is still fucked. It is clawing its way back. It is very slowly. I mean, it's been clawing its way back for about 10 years now, maybe even more, right? It hasn't been able to get itself back to scratch ever since COVID, and even before COVID, actually. But it is slowly but surely clawing its way back, okay? It's not out of the woods yet, but it's trying. It's trying its best, all right? So I am keeping Japanese yen in weak. What is going out? This is us moving on to USD now, guys. This is the last one. Final manufacturing PMI. USD. Let's just fly through this. Bullish, bearish, bullish, it's above 50. Bullish, bearish, bearish. Job openings, bearish. There's less job openings, so there's less opportunity for people to get a job, right? That's essentially what it means, which is seen as negative. Bearish. Still negative, but it's a massive increase, and it's as forecasted. Okay, so things are getting better. Worst total vehicle sales still high, but slight drop, but still high. Challenger job cuts, that's bullish because there's less job cuts, right? Went from 139% to 13. That's fucking fantastic. Non-farm payroll, employment change is 54k. Let me just see that one. I forgot if negative means actual greater than 4. Okay. Okay. Unemployment claims. Sometimes see if you forget something because there's so much fucking information here. See this little folder here, guys. If you ever, I just had a brain fart there and thought, fuck, what way is it? Sometimes you get muddled up, right? Is it supposed to be better or less? Just open this folder and it'll tell you right here, usually effect actual greater than forecast. It's good for the currency, right? And it's just a little reminder for you. You're only human. You're not going to remember fucking all of this. Unemployment claims, so that's bearish again. So bearish, bullish, bearish, 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 bullish, 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 bullish. Sorry, bearish. Sorry, my bad. So the reason why if crude oil inventories is in a plus and not a minus, it means there's more oil than people buying it, right? There's more supply than there is demand if it's in a surplus like this, okay? If it's in a negative, that means there's more demand than there is supply. It means there's more people buying it than there is of the supply that's coming in, so that's then bullish, okay? So that's why you might think, well, why if that's positive and not a negative, why is it, why is it fucking red? Why is it a bearish? Well, that's the reason why, okay? It means there's tons of demand, but nobody's fucking buying it, okay? Sorry, there's tons of supply, but nobody's buying it is what I meant to say, my apologies. Average hourly earnings are sticky, that's fine. Non-farm payroll change is bearish. Unemployment rate has increased, so that's not good. So things aren't that good for the USD just now. Last week I had it in neutral, and I'm going to keep it in neutral. And as you know, finally, CHF is just always neutral, okay? It's always neutral because you trade it based on, risk off sentiment, or that's how I do it anyway, okay? I just keep it neutral, and then I know that if we come to a risk off environment in the markets this week or next week or whatever, pardon me, I know that in that moment of time, then it's going to be bullish, all right? Now that's us done here. So I'm going to run through a recap, and then we're going to go on to the charts and do the technical analysis side, all right? Strong AUD, Euro, GBP. Okay, that's strong AUD, Euro, GBP. Weak CAD, Japanese Yen. Neutral NZD, USD, and CHF. Now let's come across here and let's start from the beginning. Now, where are we? AUD, yeah, CAD, see, because AUD is currently strong right now, but overall it is fucking shit. So you're kind of stuck between a rock and a hard place. You know, nothing is ever very straightforward at all times. Sometimes it is straightforward, but it's just not always straightforward, okay? If things remain the way they are, then I would say the likelihood is that AUD CAD breaks through, comes back for the retest reject, and then pushes up to this zone, okay? But you need to see that first. The candles must be above the 200 EMA, and it has to start breaking through, okay? Now, would you buy from here right now? Absolutely fucking not. You are in a terrible area to buy from. There is no value whatsoever to buy from here. You could sell from here in terms of areas of value. There is fucking great value to sell from here, but it then goes against the actual fundamental data of one being strong. You're trading against the strengths, okay? Doesn't mean it's not going to happen, by the way. It could start melting down because there's great value, and both economies aren't really the best. So it could go either way, but regardless, you need that confirmation, okay? You need it to break above this previous zone, come back and retest, reject, and go. Then you can enter, but you need to make sure it's not just doing this, look, bang, breaking above, and then melting down, right? You need to make sure of that. Same with this, look, when it breaks down, you're waiting for that retest, look, previous support, once broken, becomes the new resistance. You see that? Enter, and away you go. If I was looking to trade this section here, this would be my entry. None of this would be my entry. It would be this, right? That's the confirmation, okay? And this is the weekly time frame that I'm on for any of you that maybe can't see my screen fully. I'm on the weekly time frame, and that's because I trade swings. I literally trade from this zone here and just let it go, right? If I caught that, you know, that's the general idea. Where are we? Look, you can see there's really fuck all just now for me to trade. I want still buys for now, so I really think this is going to push up. I'm going to wait till it hits my zones, either this zone or this zone, okay? Potentially now it's buys, but you just can't buy it yet. There's no value to buy that yet, okay? Nothing there. No, this is buys, but there's no value to buy. You need it to come back down and retest. There's no value. Value is very, very important. Look at that, how shit that is. That's been since fucking July 2024. You know, it's totally shit, guys. That's over it's nearly a year and a half. This hasn't done anything. Yeah, you could jump down to the 1 hour time frame and fucking trade this, that, the other, but why? When you can just wait, you could jump in here and you can fucking ride it all the way. I mean, that's even a bad example because it's so shit, you know. But yeah, it's just terrible. Euro, Japanese Yen, you're definitely looking at buys. You would not be looking to sell this, but you need it to come to an area of value. Look how many times this lasts, like bang, 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 right? You need it to come to an area of value and take off. Again, you need it to pull back before you can enter. Euro, USD, you either need it to do one of two things. It must break it, like I've drawn here, right? It must break above here. The previous resistance, once broken, becomes a new support. Bang, bang. Okay, you would then enter upon here. Okay, but you need that break first. Or if it doesn't do that, if it starts rejecting, you aren't entering fucking sales. Not a chance. You would wait for it to reject here, enter the buy here, then away you go. I would not be entering fucking sales here at all, okay? If you want to, you can. It's just, you would be entering a counter trend trade. When I'm trading other people's accounts, I don't enter counter trend trades, alright? I just never do it. Look, same again, guys. This has done fuck all since 2022. It's you could trade this, but it's really done fuck all. Look, it's dog shit. It's just ranging. Pretty shit. Again, you would be buying this all day long. You would never be selling this. However, it's at all-time fucking record-breaking highs, right? There's no value to jump on a buy here. You need it to pull back, enter, and away you go. You need it. This is why, it drives me nuts when I'm saying in the bloody Discord all the time, "Oh, lads, just fuck off from me this week." It drives me nuts. But you can see it for yourself. Do you know what I mean? This is why I like to go through this. You can see, for my method, there is fuck all that I would touch. There's no value. Stevie Wonder can see. You wouldn't even fucking take that. Same again. Look, bullshit. I'm just trying to move on. But bullshit. GBP USD, exactly the same. I missed this. See here, that I had this fucking marked up. You can go back to my videos since when? January. You can go back to my videos, let's say, December, November. I guarantee you will see this marked up when the markets are fucking here. And as it came back down, the reason why I hadn't entered it at the time is what I was waiting for is the break up, the pull back down, reject, and away we go. And we just didn't get it. It fucking flew. Also, at that time, pound wasn't strong and USD was strong as fuck. On top of that, the technical side of it, the candles had broken below the 200 EMA, which is, again, another confirmation that you are potentially looking for sales. So I was waiting for it to reject here. Actually, what I was waiting for is it break down here, come up, retest and reject this zone, and then break away and start melting. That's what I was waiting for. And there was something that I didn't take into account, and I can't remember what it was. And then when I realised that, because I questioned, why did that fucking start flying? It doesn't make sense, because pound was weak and USD was strong. There was a reason for it, and it was something that I had overlooked, and I can't remember what it was, in all honesty, guys. If I could remember, I would tell you, because I like to be very honest and be like, oh, this was the mistake, so that you guys can learn, right? But it was so long ago, I've just simply forgot, so I apologise. But I remember going, oh, you bastard, I fucking forgot about that. But it's another good example of, look, see when it hits these areas of value, they're fucking solid, buy from here, sell from here, I wouldn't be looking to sell just now because the USD is in a pretty shitty way. Still tons of uncertainty. None of this trade war bollocks has calmed down yet. Nothing has been secured, all right? So what I'd be looking for is, I'd be looking for buys just now. It's the same as Euro USD. You either want it to come down, retest this area at worst, retest this area at best, reject, and then fly you into the buys, or it has to break this area here, this previous high, has to break above previous high, come back, retest and reject, and away you go. Okay, has to be like this. Boom, 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 boom. All right. Let me just change that. Bosh. There we go. So these are the two potentials that we've got. I can get rid of this. That was from ages ago. I just like to try and tidy stuff up. But you can see that I still don't have anything to trade there, guys. Okay. This ends a decad. I mean, I did mark that up, but I never took it. It's shit anyway. Look, I mean, how many? Let's have a look. Right, how many weeks you would have been in that? Right. Let's see, you got in here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks you'd be in that, right? 11 weeks for 200 pips. Fuck off. Why would you even waste your time on that? Again, look, bullshit. There's nothing there. You need it. It would definitely be sales all day long. It'll change that to red, actually. It would definitely be sales all day long, but you need there's no value to sell from here. It's way fucking, it's like an all-time low. NZD, Japanese yen, both are absolutely wank. So I really don't have a bias on this, whether you would be buying or selling it. You would really need to just see price action and what's going to pan out, because both of them are just equally shit as each other, okay? GBP USD, I did mark this up. Andreas in our group took this one. I'd probably still hold it to come down. It's tradable, and he done it, and he's in it just now, but it's just pretty messy and shitty, USD CAD, we were in buys. You can see that we entered the buy here, closed it here. Obviously, this one here isn't the real account, but I did the exact same trade on my live accounts, all right? And I was away. So, look, with my method, right, You could have left it, but the USD isn't that strong right now, and neither's CAD. This. So why I wouldn't re-enter it here? Look at this. Small candle, large engulfing. Boom. This is a perfect zone for this to come up. Bang. Retest, reject, and melt. Right? It's a perfect zone. So I wouldn't be entering here. If I was going to enter this, what I'm now waiting for is I need it to break above here, then come back down, retest and reject, and then go. And this here would be my entry point, okay? If it comes back down here and it retests this zone, then I'd be looking to buy it from here, of course, right? But yeah, right now I wouldn't be entering the buy again, because it's bang in a potential area of value for sales, and it could just totally melt. And the USD is not strong right now. It would be a very different story if the USD was strong as fuck and Canadian dollar was not strong, okay? Then I'd potentially have already entered this a second time round. But you can see here, look, 1, 2, 3, 4, 5. Is it about, let's just say 5. It's between 5 and 6 weeks where I entered that trade, and I just left it alone. Zero stress. I went away and I climbed a fucking volcano with a group of mates, and you know, was on a fucking private island. Not a private island, sorry, a party island. Gili Trawangan. Do you know what I mean? Well, this was still running. I didn't have to check it once. I didn't have to monitor it. I just let it fucking go. Alright, and that's why I like my method, because it means that I can get on with the rest of my life. Some people don't like to leave trades running, so you have to determine what type of trader you are. Do you just want in and out in the same day, like a scalp or day trader? Or you're like, you know what, I want to just wait like Ryan. Yes, it can be frustrating, you need fucking patience, but I want to enter here and I just want to let this fucking thing melt and melt and melt and melt for, you know, the next 3 months and not have to worry about it. You just have to decide which one you are, okay? Nobody can do that for you. Look, there's nothing, guys. There is nothing. Let's say USD was totally shit and Japanese yen started becoming strong, and we were in a risk-off environment, right? I'd be looking, if you're looking for sales, I'd be waiting for this. Boom, boom, retest, reject, and go. And that would be my entry point, not this. That would be my entry point. Now, why is it not this? Because this could simply be a liquidity grab. Come back down, test this one here, grab liquidity, and fuck off, away it goes. You see? So people get caught out by that. That's why I always wait for the confirmation. Break below, retest, reject, one candle reject. On the daily time frame is fine. You don't have to wait for the weekly time frame. The daily time frame is fine. Enter, stop loss above here, and away you go. Let's have a look at the dollar indexio. Yeah, it could. So we're in this zone. It could either keep melting or it could reject and start flying. We're in this zone here. Oil is still melterinies. Right, still melts. But I just wouldn't take this sell from here, because you're banging to a kind of a plateau area right there. Here we go, look. I'll move this down. Boom. Come on, you fucker. Look at this. So, yeah, it's too close to this. I just wouldn't take it. I would be waiting for it to either come back up, retest this zone here. I'll just extend that. Retest it, or possibly this zone here, actually. Retest this, then I would enter, and then take it down. Or it has to break below, come back for the retest, and then go. It's dead simple. Gold, super duper, all-time highs. I'll just wait to see what that does next week. Silver, same, need a retest. I wouldn't be buying it just now. You need that retest before it goes, right? Copper, same again. Okay, so that's pretty much it, guys. As you can see, I'm not being a lazy fucker. There is, and I don't want it to come across as a broken record by saying every week, there's fuck all to trade. I've just shown you. There is absolutely nothing that I would class as an entry right now. There's potentially this on copper as an entry. Small candle, large engulfing, boom. You know, area of value. There's potentially this for sales on copper. However, I'd be looking for a retest. Boom. Comes back here, comes back up, retest, rejects, and then goes, right? Before I would enter it. And the candles are above the 200 EMA on the higher time frames, which tells me what? you're really looking for buys. So you don't want to be selling, you want to be waiting for it to pull back down, retest or reject around about, I'm going to move this around about here, and then right there. Bish, bash, bosh, okay? That's what I'm essentially looking for. It could also come to this area here, so I'm just going to use my eyes for that. I'm not going to put fucking boxes everywhere. There's already enough on there. However, that is it, guys. All right. If I enter any trades, I will let you know. I'll put it in the Discord signals. This is our Discord here if you're someone who's new. Here's a Discord here. Look, with all the trades that we give. Look. Right, this is my business partner Lee, who he gives scalps every day. He gives like 2 to 3 scalps every single day. Look, here's people making money. $562, 230, 160, minus 37p. Again, 184, 54 quid. If we look here at trade results, look. All right, this is people. That's this one here. This is Andreas. This is a mixture of it's mostly scalps and also a couple of swings in there as well. Big Lee. Look, there we go. Here is all the trading results, guys. All right, away we go. Happy days. If you'd like to join us, just let me know. The link should be below this video on YouTube. I can't remember if it is, but if you'd like to join us, just let me know, and I will send the link to you. Okay. Anyway, don't over risk, don't over trade, stick to your rules, and have a great week.